So let's talk about office and life science. Keith Reihart and Liz Berthollet. Keith, let's talk about a quick snapshot of the office sector.
Hi, everyone. So for the office outlook, I just wanted to start with some context on where we stand as of the end of the year. So 2025 has really turned out to be the pivot point in this office recovery. This has turned out to be the first full year of net occupancy growth since 2019. We had net absorption totaling 12.5 million square feet over the course of the year. And that's really significant when you compare that to the previous 5 years, where we lost an average of 55 million square feet annually. So we definitely think that momentum is going to carry over into next year. We're predicting about 3 million square feet of occupancy growth in 2026. I am starting to think that might be a bit of a conservative estimate as I'm seeing these Q4 numbers coming in, but nevertheless, we're expecting growth next year. On the vacancy front, it was finally peaking at around 20.5% as of the end of the year. We think this will likely remain essentially flat through the end of next year. We're going to be seeing some of those occupancy gains still being somewhat offset by continuing deliveries, although that construction pipeline is winding down at this point. Asking rents were less impacted over the last couple of years. They stood at around $36 a foot at the end of the year. We do expect this to increase next year, but gains will be fairly marginal. We also might see some compression on effective rents next year, and that's really going to be due to rising concessions on free rent and TIs. Last but not least, the construction pipeline, it's going to drop down to just 10 million square feet of deliveries next year, and that's going to be the lowest annual total in over a decade. I'll pass this along to Liz Berthollet for the life science outlook.
Thank you, Keith. Welcome, everyone. So I think we'll start off by kind of wrapping up 2025. And really, the only way to describe the last year or last several years is acute distress, right? Life sciences has been facing a lot of headwinds recently. And I think that's reflective in, the market fundamentals data that we see on the screen. I would like to note, though, that we are starting to see inklings of green shoots. And I'll kind of talk about those themes a little bit before we get into the Q&A. But we're expecting stabilization on the horizon, and that's really going to be led by the Bay Area, where the Q4 data that we received is quite positive, with several 100,000 square feet of positive absorption. Vacancies are down. Not true necessarily in the Bay Area, and Boston is probably a little bit flat, and those three markets really drive most of what we see in the life science sector. Construction, non-existent in Q4 for the Bay Area and San Diego, and rapidly moving to zero in many of the other markets that we track. Big pharma, institutional clients, AI-related life science companies really driving tenant activity. So the early to mid-stage venture-backed companies are still struggling to move and expand, but the major players are making moves. And it's very much a tenant's market still for life sciences. So if you're a user, you have your pick of spaces, and landlords are being very, very aggressive on, effective rents, phased in, TI, concessions. So really some sweetheart deals out there for tenants that are looking to transact in 2026.
Awesome. All right. Thank you, Keith and Liz. So from a capital market standpoint, it's really nice to hear that you both have the kind of these positive outlooks and seeing some stabilization in the fundamentals. But we do need to start talking about how they're wrestling with distress. It's been coming up for office. It's certainly been coming up for life science for several years at this point. So from now that the fundamentals have at least stabilized, right, or at least plateauing, if not turning the corner, how do you see that shaking out in terms of distress, and where do you expect a recovery to show up first? Where's your sectors the strongest?
Yeah, so I can start for the office portion here. So I think we're going to be seeing owner-user sales gaining relevance in the coming years. We're going to be seeing occupiers taking advantage of pricing that's currently a major discount from some of the peak highs we were seeing a few years ago. Investors will be capitalizing on pricing as well. I think we'll be seeing more purchases of those highly vacant Class B and C office buildings for potential conversion to multifamily. It's probably we'll probably need a few more data points to see exactly how that will shake out, but nevertheless, These conversions will be impacting different markets in different ways. I think a good way to kind of estimate this is to look at which markets have a larger share of quote unquote highly vacant properties. So for example, a market like San Francisco, they have a fairly large share of buildings under 70% occupancy. So that's a market where conversions might make more sense.
For life sciences, I think we're a little bit behind the office market in terms of, the capital market distress and recovery. So we're still seeing a lot of that in the life science market. Every owner, even the experienced operators, are really examining their portfolios very, very closely. So we're seeing a lot of dispositions of non-core assets in non-core locations, or a lot of development sites that were purchased for lab ground up development or even conversion to office to lab. Those are being sold at heavy discounts across every major market that has a life science cluster. We're seeing select users take advantage of the eroded values and really move into some new construction or interesting buildings and take that opportunity to own their own life science space as opposed to leasing it. But overall, I do think there'll continue to be distress in the capital markets into 2026 for life sciences.
Sounds like a lot of interesting opportunity for both investors and some tenants in this landscape. So I definitely want to pivot. This is going to be a big pivot. A few months ago, I was at this major occupier conference, and there were hundreds of corporate real estate leaders, and they were asked, what's going to be the biggest change in CRE over the next few years? I'm sure, to little surprise, the overwhelming answer was artificial intelligence and automation. These days, it's really hard to have any kind of conversation with investors or tenants without AI coming up. So I'm curious, for both your sectors, office and life science, how do you see AI impacting your sector in 2026 and then even beyond?
Yeah, so I can start here. So I do think in the near term, we're definitely going to see increased demand, and that's going to be in the major tech hubs, think San Francisco Bay Area, but also some of those more emerging tech markets like Austin, Denver. Markets with generally large talent pools will definitely also benefit. And so we're talking about markets like Boston and Manhattan. I think in the medium term, there may be some demand softening. I think it might be a little too early to make a general, concrete, long-term assessment, but AI definitely has major potential to create new businesses and even new potential industries that we might not even be able to foresee yet, and ultimately become a net job creator. Yeah.
For life sciences, there's a lot of impact to the way science is done, research and development, as well as the implications for the healthcare sector as well. So I think for the industry itself, AI is going to change how fast we can do science, where the science is done, what models we might need, how the clinical trials are happening, and we can actually create smarter, faster, more targeted treatments for patients, getting those treatments to the patients faster. And there is an argument that would create a need for more R&D to be happening amongst life science companies. So what does that mean for commercial real estate? Remains to be seen, but there is a lot of talk about the need for flexible lab to office ratios, flexible wet lab to dry lab ratios. So there's a lot of discussion about what it ultimately means for the real estate in this sector. But all we know is that every major pharma company is investing more in AI, and a lot of those companies are growing today. And, there will be an impact on the real estate in the future.
All right, Liz, Keith, thank you very much.